Once again, today I am here with chapter 19, that is meaning, objectives and terminology of accounting, one of the most important chapter in this book. So let's begin. Meaning of accounting. Before I start with the meaning of accounting, I would like to give a short introduction to this chapter. In every society, people exchange goods for services and money. In earlier days, there was barter system, but due to some disadvantage in the system, it came to an end. Then there was evolution of money. People started exchanging goods for money. Such exchange between two or more persons results in transaction, and whenever that exchange took place and is taking place, that exchange is known as transaction. For example, a farmer sells his wheat and receives money in exchange. So cash paid by the buyer of a product is received by the seller. Thus, transaction involves transfer of money and money's worth. A systematic and written record of all transactions is necessary because no individual can remember all the transaction. In a very simple example I would like to give, like suppose a shopkeeper has a shop and every day he is transacting in his business. Every day he is having a list of transaction, so he cannot remember all these transactions verbally or orally in his mind. He needs to keep some record of it, whatever transaction is done in a day. So that written documentation or written record of the transaction is accounting. Actually, it is not accounting. Accounting is a systematic way of entering the transaction according to certain rules and principles. So, the meaning of accounting is, as you can see in your textbook, page number 146, according to American Accounting Association, there are different definitions given by different people. So one of the very famous definition given by American Accounting Association is, accounting is a process of identifying, measuring and communicating economic information to permit informed judgment and decisions by the user of accounts. Then we have one more very popular definition given by American Institute of Certified Public Accountants. Accounting is the art of recording, classifying and summarizing in a significant manner and in terms of money transactions and events which are in a part at least of a financial character and interpreting the results thereof. So in this definition is a very complete definition. I would like you all to learn this definition given by American Institute of Certified Public Accountants. So the keywords are, it's the art of recording, classifying, summarizing in a significant manner and in terms of money. What transactions and events, and they should be of financial character and there should be certain results. So the above definition reveal the following features of accounting. The first feature is, it is an art as well as science. How? Accounting is both an art as well as science. It is art because the day-to-day transactions, business transactions, are recorded in a systematic and a sequential manner. It is a science of maintaining business record in a regular and proper manner so as to ascertain the business results easily and correctly. And why it is a science? Because the record is maintained according to some fundamental principles, and it is an art as well, because the records are designed to suit the particular requirements. The definition itself suggests that accounting is an art of recording. So here comes the word art, classifying and analyzing business transaction, and when it is done according to certain fundamental principles, then it becomes a science. Second is financial transactions. Accounting records transactions and events of financial nature. That means the transaction where money is involved. If a transaction cannot be measured in terms of money, then it will not be recorded. For example, a conflict between production department and sales department may affect the earnings of the business, but it is not recorded because it cannot be expressed in terms of money. Any kind of conflict between the departments in an organization, in an institution, cannot be expressed or measured in terms of money. Therefore, it is not recorded. Accounting books of a business firm thus contain only those transactions which can be expressed in terms of money. So, the only thing you must remember is the transactions which can be measured in terms of money, it comes under your financial transaction. Third feature is recording. Accounting involves recording of business transaction in a systematic manner. It is done in various subsidiary books such as cash book, purchase book, sales book, purchase returns book, sales returns book, etc., etc., depending upon the nature and size of business. So these are the various books, subsidiary books, where the various transactions are recorded. Fourth feature is classifying. It means grouping the entries of transactions of same kind at one place. This is done by opening a book called ledger. Like for example, machinery account. The ledger of machinery account contains all the transactions related to machinery. Similarly, ledger of cash account contains all the transactions related to cash. Fifth feature is, it means, that is summarizing, it means the process of presenting the classified data in a manner useful to the user of accounts. This involves preparation of final accounts in the form of trading account, profit and loss account, and balance sheet. From the trading account, gross profit is generated. From the PL account, net profit, and balance sheet gives the financial position of a firm. Sixth feature, analysis and interpretation. The accounting statements are analyzed and interpreted with the help of ratios. Such analysis helps the management and others to judge the performance and financial position of the business. I move on to meaning of bookkeeping. There are various definitions given by different people: J.R. Bartleby, R.N. Carter, Northcott, L.C. Cooper, Eric L. Kohler. So let's begin with the definition of J.R. Bartleby. Bookkeeping is the art of recording business dealings in a set of book, or bookkeeping is the science and art of correctly recording in books of accounts all those business transactions that results in the transfer of money or money's worth. Next is bookkeeping is the art of recording business transactions with the view of having permanent record of them and showing their effect on wealth. And the last is bookkeeping is the process of analyzing, classifying and recording transactions for the purpose of providing a means by which an enterprise may be conducted in an orderly fashion and establishing a basis for recording and reporting the financial affairs of an enterprise and the result of its operation. This is a lengthy definition, so I would like you to learn the definition given by J.R. Butley or L.C. Cooper. Continue with the concept of bookkeeping. Bookkeeping is concerned with systematic recording of transactions in the books of original entry and their posting to ledger. It involves, first is journalizing, second is posting made to ledger, third is totaling of accounts, and the fourth is balancing of account. So these are the steps involved in bookkeeping. The work of bookkeeper is clerical in nature, and he requires knowledge of double entry principles. Accounting begins where bookkeeping ends. Accounting involves preparation of trial balance, preparation of trading and profit and loss account, preparation of balance sheet, making rectification and adjustment entries. So I hope till here it is clear. Next, I'll proceed in the next class. Thank you and have a marvelous day ahead.